Hey tech fanatics, welcome to the Thursday edition of Tech Stocks Daily. Buckle up, because today's episode is packed with all the high-tech twists you crave. We're zooming in on Netflix's blockbuster earnings, popcorn-worthy growth and big-time ambitions. Meanwhile, Google's caught in courtroom drama, with antitrust cases shaking things up, and we're anticipating their earnings report that'll have Wall Street buzzing. Spotify is turning up the volume with stellar stock moves and revenue projections that'll make your portfolio sing. So whether you're trading at home or just tech curious, stick around for the full scoop and insights to keep you ahead in the trading game. Let's dive in. In today's tech headline extravaganza, Netflix has been stealing the limelight like it's binge-watching its own show. Let's dive into the latest juicy updates on the streaming giant that's giving investors reason to Netflix and chill while they watch its stock price climb. Netflix recently dropped the curtain on its first quarter earnings, and it wasn't your typical lighthearted rom-com, more of a heart-pounding thriller where investors remained glued to the edge of their seats. For starters, the company exceeded everyone's expectations by reporting a revenue of $11.4 billion, steamrolling over the $10.9 billion estimates. It also showed off its financial gains with an adjusted earnings per share of 7.03 cents, significantly beating predictions of 6.27 cents per share. The driving force behind Netflix's stellar performance? A healthy 13% year-over-year revenue growth, courtesy of swelling subscriber numbers and some strategic price hikes earlier this year. It seems that Netflix users are willing to pay those extra bucks for their weekend binge watch sessions. Pricing went up across various plans, with the standard set at $17.99 monthly and the premium getting a red carpet-worthy price tag of $24.99. Netflix is also pushing those advertising dollars hard. In what feels like a plot twist, the company traditionally known for keeping ads at bay has doubled down on advertising, even launching its in-house ad tech platform in April 2025. It's aiming to turn advertisers' dreams into reality while boosting revenue streams at the same time. The plan is to rocket its annual ad sales to a cool $9 billion in the next 5 years. Despite the choppy economic waters, co-CEO Greg Peters reassures that Netflix is built to withstand tariffs, recessions, or even a surprise plot twist in a teen drama. They've emphasized that the entertainment industry has been historically resilient, keeping folks occupied whether times are good, bad, or just plain confusing. Former bigwig cable executive Tom Rogers believes Netflix's ambitious $1 trillion market cap target by 2030 is as attainable as a rom-com's happy ending. With current margins aiming for 30% EBITDA and pushing toward 40% over the years, Netflix is not just playing the game, it's leveling up. The former spotlight-hogging media darling is pivoting its narrative, eyeing even broader horizons thanks to continual user engagement and those juicy ad revenues. Netflix's fifth season of rapid expansion is already mapped out. Eyeing increased market caps, the streaming connoisseur looks to stack its subscriber base with an additional 100 million viewers over the next 5 years. For investors, it's like having a popcorn bucket that's miraculously never-ending, as long as viewers remain glued to their screens. In conclusion, the streaming champion of the world might be cozying into a multimedia behemoth, propelling itself with numbers that even Wall Street can't binge fast enough. And as Netflix's plot thickens, it is clearly positioned not only for substantial growth, but also to fend off any villainous economic downturns. Keep that remote handy because this is a growth saga you won't want to miss another episode of. All right, tech enthusiasts, grab your favorite caffeinated beverage because Google's got some stuff going on. First up, the Goliath of search engines finds itself in a bit of legal spaghetti, caught up in antitrust cases that are cranking up the heat on Alphabet's thermostat. In a noteworthy development, the U.S. Department of Justice rang the bell with a partial victory against Google, arguing that it has been playing Monopoly on the advertising playground for way too long. Judge Leonid ruled that Google has been up to some anti-competitive tomfoolery, specifically in the ad server and ad exchange markets concerning open web display advertising. However, the accusations of monopolizing ad networks got the good old nope from the court. Notably, Google's still maintaining its poker face, with VP Leanne Mulholland stating they'll appeal the stickier side of the ruling. Sliding across the ocean over to the UK, Google is now wearing a target that comes with a monstrous $6.6 billion lawsuit badge. Allegations claim the Big G Shield has been rigging the system to ramp up ad prices by lighting up contracts with manufacturers and making deals with Apple that essentially tell competitors to take a hike. With British businesses feeling the advertising pinch, they've decided it's time for some legal kung fu against Google's alleged market antics. But it's not all courtroom clashes for Google. Buckle up, because earnings season is entering beast mode, with Alphabet, Google's parent company, ready to roll out its financial report on April 24th. With a market cap just shy of $2 trillion, no big deal really, the company has been working on maintaining dominance against emerging competition like OpenAI's ChatGPT. Despite concerns that OpenAI's chatbot might be making some secretive plans to dominate the search universe, Google's search engine revenue is still sending postcards of good tidings, recently hitting $54 billion. Wait, there's more. Throw in a side of drama with a rather sophisticated phishing scheme that's surfacing like an unexpected ocean wave. Crafty cyber tricksters are using Google Sites in an attempt to fool users into surrendering their credentials, styling their fishy emails so convincingly that they'd make a chameleon jealous. The scheme hinges on a fake subpoena alert that knackily resembles Google's usual security emails. Of course, Google's busy on dragon-slaying mode, currently rolling out defenses and assuring users that they never, ever ask for your private access info. So whether it's legal rumblings, financial excitement with upcoming earnings reports, or cybersecurity vigilance, Google's newsworthy escapades today offer plenty of attention-grabbing goodness. Tune in next time, where we'll inevitably spill more on the phoenix rises and falls of the tech overlords. Spotify is stealing the spotlight today on the tech scene. With stocks making waves and analysts buzzing, let's dive into why everyone keeps pressing play on Spotify news. First up, Spotify closed a recent trading session at a striking $574.25, flexing a 1.99% change from the previous day. Compare that to the S&P 500's modest 0.13% uptick, and you can see why Spotify's caught the eye of investors. It's not just outperforming the index, it's dancing past recent monthly losses, sporting only a 3.95% descent compared to the sector's deeper dive of 9.27%. Talk about staying in tune amidst a cacophony of market chaos. April 29, 2025 is circled on many a calendar since Spotify will drop its financial results like a highly anticipated album release. Expectations are soaring, with projections of $2.31 per share, marking a colossal 120% climb compared to the previous year's quarter. Revenue predictions tally up to $4.41 billion, an impressive 11.64% increase. It's like Spotify is going for triple platinum status in the financial charts. For the whole fiscal year, EPS and revenue are predicted to soar by 74.29% and 11.68% respectively, sparking plenty of interest among investors and analysts alike. From harmonizing its own metrics to scoping out the industry, Spotify's current valuation has not gone unnoticed. It's juggling a forward PE ratio palpably richer than others in the industry. Even though that positions Spotify as more of a premium option, some analytic eagle eyes consider this to show confidence in future stock advancements, where an entire industry upswing might just elevate its stock value even more. Now, casting our ears over to analysts and their revisions. The Zacks rank system provides a handy touchstone for those tracking the ever-shifty sands of stock sentiment. It's based on estimate revisions that have nudged Spotify to a rank number 3. But given the strength of Spotify's industry, the internet software sector chilling in the top 30% of over 250 industries, it takes a skilled move to navigate this melodic beat in stock prediction. So here's the twist. Are we witnessing an era of Spotify crescendo toward jolting follower figures and profit? Only time will tell. Be honest though, share your thoughts. Are you feeling low notes or high tides for Spotify's future standing? Hit us up in the comments below. I'm eager to get your feedback. All right, tech aficionados, let's tune into the rhythm of today's market and dive deeper into Spotify. Based on the latest encore of updates and financial predictions, here's my take on whether to hit the play button on a buy, pause on a hold, or fast forward to a sell. Looking at Spotify making those sweet tunes in the market with a stock price increase of 1.99% against the modest S&P 500 rise and significantly outperforming the sector's losses, it's clear they've got some positive momentum. They've maneuvered through early market tumbles like a skilled DJ, overcoming a sector downturn of 9.27% with their descent being just 3.95%. With financial results expected on April 29, 2025, Spotify's projections are almost like dropping a surprise summer hit, an EPS leap of 120% compared to the previous year's quarter, and revenue increases of 11.64%. That's a phenomenal chart-topping performance right there, and it's sparking plenty of excitement in investor themes. So let's consult the crystal ball. My recommendation here would lean toward holding the stock. With high expectations fueled by impending financial results and a valuation that poses Spotify ahead of some competitors, it appears poised for a dazzling encore. However, given the premium forward PE ratio, it's worth staying tuned to how market dynamics unfold, or if new players start influencing the chorus. Remember, I'm just here playing DJ. Cue up your own mix by doing the necessary research and listening to diverse analyses. Market tracks are dynamic, and today's hit can drift tomorrow. So take the time to align decisions with your own investing style and risk appetite. Keep those ears open to the markets, and may your financial playlists rock for you. What a day in the tech universe. Netflix is flexing its growth muscles with jaw-dropping earnings and sky-high subscriber aspirations. Meanwhile, Google's story leads with a bit of legal drama mixed with financial anticipation, courtesy of their upcoming earnings report. Over in the audio realm, Spotify is dancing to upbeat projections, teasing impressive financial gains that have investors tuning in. If you enjoyed today's rundown of the tech world's top hits, be sure to smash that like button, subscribe for your daily dose of tech vibes, and share this video with fellow tech enthusiasts. Keep your calendars marked because there's a jam-packed session next time with more groundbreaking updates. Catch you tomorrow for another whirlwind tour of the tech scene.